Video, I want to talk about the pound dollar. Today is Sunday, going into Monday. The market's open. It's February 24th. And I got some emails questioning me about some of the trades, the techniques that I use, the continuation breakout trade and the HL30, and why I didn't take certain trades last week. Well, first of all, we're looking at the pound dollar 1 hour chart, and I'll show you this right here. This signal candle was actually right here where this downward arrow is pointing. That was actually a continuation breakout trade. You'll notice with this bounce down here on the left side of the chart, and then price moves straight back up for probably, what is that, 6, 7, 8 hours straight back up and then stops. And then it creates that resistance level. And you can clearly see that is a range of resistance. This is the 1 hour time frame. Here, the 1 hour candle finally closes above that resistance level. And at that point, that's my signal candle. Now, once I get a signal candle, I need a 3-pip entry, which means that price needs to come up 3 pips higher than the signal candle, as long as the indicators all confirm. Well, on this particular signal candle, the first problem that I had with it is that the Bollinger Bands weren't really separating away from each other the way I need them to, or the way I prefer them to, which shows that sign of strength. So that already wasn't there, and that was already a sign, or I was pretty suspicious about this particular trade anyway. But regardless, many times you'll notice that that 3-pip entry rule keeps you out of trouble. So the high of that signal candle was 53.19. So I really can't get into it until 22. Now the high of this white candle here only went as high as 15, so it never gave me the 3-pip entry. So there's two things wrong. First of all, on the signal candle, the Bollinger Bands weren't separating, even though I got confirmation everywhere else, the CCI and the MACD. Bollinger Bands weren't separating. They need to be separating. And the second problem with it right away is that it's going opposite direction of the trend. Now, it doesn't mean that we can't trade opposite direction of the trend. It's just if we do, we've got to be very careful about it. And there's got to be a significant reason for price to move far enough. We're usually looking for a 55 pip target on this particular trade, on this time frame, on this pair. So again, Bollinger Bands weren't separating, and we never got the 3-pip entry. So the 3-pip entry kept us out of trouble on this one. Now I'm going to switch to the 30-minute time frame, because there was also an HL30 afterward, or I'm sorry, prior to that, before this signal candle here. So we're going to take a look at the 30-minute time frame right in here, and I'm going to move the charts over here, and this is what we had going into Thursday and Friday. So we had this range of resistance, and remember on the HL30 what we're doing is we're trading the high and the low of the previous day. So you'll notice here's the high, here's the low. I'll go ahead and put a support level in there. And price is near the resistance level anyway, so we're going to be looking for an HL30, and if we were to sell this, it would be in the direction of the trend. So here you'll notice was the HL30 pattern, but I didn't trade that. One of the reasons that I didn't trade that is that it seemed like the market was sort of going through this shift where currencies were moving in different directions and nothing was really making a whole lot of sense. Not that that doesn't make any sense. I mean, things can certainly move in different directions based on economics, based on activity, based on fundamentals, based on sentiment. There's technicals. There's a lot of reasons why price would move, but I couldn't find a solid reason or a significant reason that really supported price moving very far. If I take a signal, there has to be a target. If I don't have a target, I have nothing to aim at, and I won't take the trade, even though I can see the potential of price moving around somewhat. It could move 40 pips, it could move 80 pips, but if there isn't a signal, a solid signal, and it just sort of gradually moves off in one direction, I sort of stay out of a lot of that just until it finds a support or resistance level, and then it gives me a brand new trade. So this HL30, I didn't sell this, even though it was in the direction of the trend, and you can see a few hours later, it would have been stopped out anyway. Now, it's not to say that the HL30 doesn't experience losses. It does. It experiences losses, not significantly, but it does experience, I do experience when I trade the HL30 losses more often than when I trade the continuation breakout trade. The continuation breakout trade is a much more reliable trade than the HL30. So with the HL30 you got to be careful. But again, there are times when it fails, and this was one of those instances where I could see that it would probably fail and we'd probably get another spike here on the pound dollar. Things were really starting to shift and move around in a really significant manner, and it's really important that you stay in tune with that sentiment. So that's the reason that I didn't go long on that continuation trade or the HL30.